Hello, entrepreneurs. Joe DeChara once again back here, coming to you live from downtown Flushing, New York. And yes, we are still in pandemicville here. People are slowly coming out, folks. But I don't know about you, but I still don't feel too comfortable. Somebody came like within 6 feet of me tonight, and I got all this anxiety, and I just had to move. I was shopping, and I said, "This guy is coming too close," and I knew it. I knew it, and he got to within like 4 feet, and I just had to leave. So what are we gonna do, folks? This is where we're living now. Everything is done by computer. I'm doing all of my business on the computer. I haven't actually seen face to face a client, man, since January, I guess, maybe February, but it seems like years ago. Anyway, if you're just joining me, if you don't know me, my name is Joe DeChara. I'm a serial entrepreneur with a New York State CPA license, and I love talking about business. I love helping solopreneurs mainly, start, build, and manage their business. I especially love working with new business owners. And why would you even care about that? I read a book, How to Win Friends and Influence People, a long time ago. And the truth is that you really don't care what I like. And I understand that. I don't take it personally. And you probably don't even care if I take it personally or not. But the truth is that you only care about yourself. Anyway, that's what they claim in the book. And people are really more concerned about how does this time that you're spending listening to them, how is it going to benefit you directly? And the truth is, I have no idea. I don't know if you're going to take this stuff and use it. I don't know if it matches with what you're doing, but it has helped a lot of people. I would like to think that over 35 years working with thousands of small business owners, that I have been able to help at least a few people save money on their taxes, not spend money that they didn't have to, maybe raise capital. Any way that I could help a business owner steer clear of the obstacles, that's how this can benefit you. And tonight, what I am going to talk about is, I'm still sticking with the accounting, fundamental accounting that I learned from 1926. I started learning this stuff. So I think I know a little bit more than the average person about accounting. And the good thing about that is, if you have a business and you're actually generating revenue, and don't assume that just because somebody has a business that they got money coming. And I mean, like, there's a lot of businesses that have zero. They have zero coming in. They never had money coming in, and they might never have money coming in. So if that's the case, if you're at zero, this is not going to help you. I'll tell you right now, because you got to at least have more than zero. Because once you have more than zero, now you got to make a decision. And hopefully the more than zero is there's more revenue than expenses. And I don't assume that anymore, people, because I've seen too many tax returns. I've seen too many entrepreneurs show me their books, and all they have are expenses. and they even have expenses that they don't know about. But once you get to that point where you actually have a dollar more in your bank than what you started out with, you have to make a decision. And not making a decision is making a decision. But now that dollar, hopefully it's in a business bank account, you get to decide how you're going to take that from the business. Because really it's symbolically not yours. It was the result of your business, whatever you did in your business. So let's say theoretically you have some profits and they're sitting there, and this is why you went into business. Think about it. You didn't go into business because it was fun, unless you're like me. I mean, I find something fun and I want to turn it into a business all the time. It's not always feasible or possible, but that's how I think. And the bottom line is, if you're in business, you want to be making a profit, which leads to the all important question of how are you going to pay yourself? And that's what tonight's lesson is all about. But before I get into that, I do want to invite you to, if you're watching live, give me a hashtag live. And if you're watching the replay, give me a hashtag replay. Only because the more activity I get on the Facebook Lives and in the group, it raises whatever it is it's supposed to raise. And that's supposed to be good for everybody that's in the group. So if you're watching, at least give me a hashtag live or a replay. And if you have any questions, post them in the chat. I'm not going to attempt to answer them in real time because it's just too distracting for me. I need an assistant to help me do that. It's hard for me to do more than one thing at a time, believe it or not, because I can lose my train of thought. I forgot what I was talking about. Oh yeah, paying yourself. So let me go and let me do the share screen thing. I'm going to share and another feature, another activity that I've added to the show is the quotes. And that was my phone. Another thing, I got to have a checklist to at least lower my phone volume. And again, if I had an assistant to help me with this stuff, it would be a lot easier to run my business. And so tonight, and I started this, I think last night, we call it bedrock quotes. And these are quotes that I've handpicked only because I like them. So let's go to quote number one. And your purpose in life is to find your purpose and give your whole heart and soul to it. Now, who said this? I should start a contest. Maybe that's a great idea. And I'll have to do it again. I need an assistant for that. But if you guessed Mr. Buddha, you guessed right. And for quote number two, it's sort of similar if you look at it, but decide upon your major definite purpose in life and then organize all of your activities around it. So give me some love in the chat box and tell me if you agree. Is this sort of like, I know the first one is a lot deeper, I'm putting my heart and soul to it. And the second one, who I want you to guess who this is, it's sort of like, okay, let's do all our stuff, and we're gonna put it around this, whatever our purpose is, almost like a task list, which is fine because whatever, if it gets to you, I still like the quote. And if you guess Brian Tracy, you were right. And that brings us into tonight's training, which is how to save massive dollars when paying yourself. And this sort of is like a segue from last night's Facebook Live. And I am trying to create a sort of logical flow to this stuff. And I hate to keep bringing this up, but if I had a good assistant, a lot of this stuff would be easier. And I'm just saying, I'm putting it out there. And so the logical order was yesterday, I talked about, being a sole proprietor, an LLC, or a corporation, or an S-corp. And tonight, the question is, well, what's the difference? And the difference is that life is difficult. And this is another quote from a book that I read called A Road Less Traveled. And it was, and I'm going to give him credit, Scott M. Peck, MD, I think, wrote this book, The Road Less Traveled. And the bottom line is, once you figure out that, what, life is tough, you could accept that, and then you can start enjoying life. Because let's face it, you're not going to do anything about life being hard. It's not happening. And then if you're stupid enough to go into business, you just made your life a lot tougher. And the truth is that most business owners find it hard, which is why, according to Forbes, 8 out of 10 businesses fail. Now, the number is actually higher. The number is probably more like 96% out of 100 fail. Because if you give somebody enough time, if you think about it, most businesses don't last forever. There's very few that do. And that's the fact of it. So if you're starting a small business, expect to go out of business unless you're one of those people that can persevere. And that's why tenacity is one of my leading principles that I have to follow. And so you have your life, which is hard enough, and now you got to set up a business. It's easy. It's easy to make bad decisions. Or worse yet, not even make a decision because you don't know that you were supposed to make a decision. And most entrepreneurs don't know that there are different strategies for taking money out of their business that can make a lot of difference. And tonight, like I say, if there's a simple explanation, I believe that more sole proprietors will create an S-corp, which is what last night's lesson was about. So this is sort of like another layer to yesterday, because yesterday I gave the overview of the benefits of an S-corp. And like I said last night, there's really only 3 legal structures that you can pick. And sole proprietor is one of them. And that's what you are automatically when you start a business. Now, what perplexes me is that out of 30 million businesses in the United States, 25 million are still sole proprietors. And last night, if you watched it, and if you didn't, you can catch it on my YouTube channel, Bedrock Business Builders. And, I explain the main reasons why being a sole proprietor is not a good way to do business. You can become a corporation or an S-corp, which is what I usually recommend for single owner operating entities. And what I mean by operating, it's not rental property or oil wells or coal mines, which are all considered passive activities. So you don't have to be a corporation or an S-corp if you want to be a landlord. Different tax rules. Or you could become a limited liability company. Now, unfortunately, a lot of people that make the decision that being a sole proprietor is wrong, what I see is 90% of the time they choose to be an LLC, which again, if you watched yesterday's lesson, you'll know that, and I think I went ahead, but being an LLC means that you're still a sole proprietor. And so being a sole proprietor, this is the tax problem with being a sole proprietor. No matter what you make, you are paying Social Security tax on it, plus income tax. So whatever you make is what the IRS claims is what you're paying yourself. Now, the kicker is that you don't even have to pay yourself. If that money is in your bank account, let's say you had $100,000 profit and you just wanted to keep it there. Well, okay, at the end of the year, you file your tax return and now you owe 15 grand in self-employment tax and let's say 25 grand in income tax. That's 40 grand. Well, you don't, that 100 grand ain't yours. 40% of it is the government's, and you don't have a choice. So now you're either going to take the 40 grand out of the business to pay the taxes, or you're going to take it out of your personal funds. That's not a good way to do business. That's not managing your money when you have no choice. And that's what I just said. Even if you don't take the money. And like I said before, if you're an LLC and you don't elect to be taxed as a corporation, you are still a sole proprietor. And again, you're going to pay 15% tax on Social Security and income taxes on the net profits, again, even if you don't take the money. The only choices, the only leeway, the only tax benefit that a small business owner can benefit from is by being a corporation. It opens up a whole slew of other benefits that I'm not going to get into, but simply from the standpoint of paying yourself. Now, being a corporation, you can incorporate, does not do the trick, because then you get hit with what they call double taxation. You see, if you had that $100,000 profit in the corporation, there's only two ways for you to take it, either as a salary and or a dividend distribution. Now, if you take the salary is you're paying Social Security taxes and payroll taxes on that. And so let's say you take $60,000 out as a salary. I mean, if you take the whole 100 out as a salary, you're back to what you're paying as a sole proprietor. You're just paying taxes on the whole thing. So how do you maneuver that so you don't? Well, if you're a corporation, so obviously you don't want to take 100,000 salary because that's you're still paying the maximum tax. So you have to do it in some combination. Now, just keeping the numbers simple, let's say out of the 100, you take 50,000 as a salary. Now you're paying self-employment tax and income tax on that 50,000. Now, what's left is 50,000 in the corporation. Unfortunately, the corporation has to pay a federal and probably state income tax. And you can only take whatever's left over as a dividend and pay income tax on that again. So that's what they mean by double taxation. You're not saving any money. It defeats the purpose. There's other reasons why people have S-corps, and it's more sophisticated. It's when you start making more money, and then you can start with multiple entities. But a corporation, unless you have a specific type of situation when you're starting out. In other words, usually if you're starting a corporation and all you have are losses and you have no personal income tax, that's when you might want to be a corporation. Because if you have the expenses up front, once the corporation starts making money, you could actually withdraw that money out tax-free because you put the money in the business to fund those expenses, if that makes sense to you. And I'm going to go through that in a little bit slower in the next example. So a S-corp is only going to work in a limited amount of circumstances, which are if the shareholder has no taxable income and there are only losses in the beginning, which is understandable. Usually a business takes at least 18 months to 24 months to start generating a profit. So what does that leave us with? Just like last night, and these were not supposed to come up that way. I was supposed to click it, and again, if I had the assistant, it would have worked better. But the S-corp, these are some of the ways, some of the main ways that you would benefit from how to paying yourself from the S-corp. Number one, I've seen people have S-corps and actually taking more in salary than they were making in profit, which is ludicrous because let's say you're taking a $50,000 profit and you're paying yourself a $50,000 salary and you're an S-corp. All you're doing is you just created payroll taxes for yourself. So the first strategy is if you are an S-corp, lower your salary to what it costs you to maintain your personal lifestyle. And that's why I usually start a new client off with a budget. And I do see that there are people, and oh, it's my assistant Elizabeth, and thank you. So wow, I just figured out that I can go interactive, but I don't know how to. Oh, so I still can't answer you. Hi, Elizabeth, and somebody else is there. Is that Tatiana? I don't know. Tessa Ashford. Hello, Tessa. Anyway, where was I? And I told you that I get distracted with the comments. I shouldn't even done that. But one of the first strategies I take, if somebody has an S-corp, I will look at, are they taking too much? Now, I had a client who had a wife that made a lot of money. She made $300,000 a year, and his business was making a lot of money. He was making, let's say $500,000 a year with his business, but he didn't need to take a large salary from the business. In fact, he took very little money out of the business. He kept investing it. So when I came in there, I lowered his salary down to $50,000 a year because it was more than enough to show that he could pay his personal living expenses because of his wife's high salary. Now, if she didn't have a salary, $50,000 a year would not have been enough to pay his mortgage and his real estate taxes, and he had 2 kids and a nanny. So that wouldn't have been reasonable. But this is a legitimate legal strategy to greatly reducing the taxes. Now, the other example, what I used with the S-corp, with the $100,000 profit, I have the same situation with an S-corp, and the difference is that there is no double taxation. So you'll take that $50,000 salary. We're going to accept, paying the payroll taxes on that. There's not, you can't always escape 100% of the taxes. But the 50,000 that was in the S-corp was subject to corporate taxes. There are no corporate taxes on an S-corp. You might have some minimum taxes to pay at the state level, but those are state taxes. So you get to take that whole 50,000. Now you still got to pay income taxes on that 50,000, but you were paying income taxes on the dividends from the S-corp. So that's why being an S-corp is preferable. Now, another trick that I've used, and it's more dangerous to do this as a sole proprietor than as an S-corp, and I went through that last night. But what you can do is you can contribute personal property to the business. And then what happens is the business actually owes you whatever the fair market value of that property is. So for instance, let's say, I'm going to use a different example. I always use a desk. Let's say you have a safe that you bought for personal uses, and now you have a cash business you didn't plan on. You paid $1,000 for the safe, and you need it for the business. And the fair market value of the safe, because it can't be, what you paid retail. It's got to be like what you would pay for it as a used piece of merchandise, which you could easily document by going on Craigslist or anything, or just coming up with a reasonable amount. But let's say, the safe is worth $500 now. I'm going to give it to my corporation, and the corporation now owes me $500. I'm not selling it to the corporation. There's no sales tax. I'm contributing it. It's the same as if I took $500 and put it in the cash into the bank account, and then went out and bought the safe for $500. The only difference is I already own it, and I'm putting it in the business. Well, the business doesn't have a way to pay me the $500 unless there's revenue. Well, along comes somebody that pays the business $500 for consulting advice. Well, the business has not made a profit because for tax purposes, I get to write off that safe. in the form of depreciation. And the new tax laws are great. I get that whole deduction right up front in the first year. So now, for tax purposes, my corporation is broken even. And what I did, and now there's $500 sitting in the bank account, which I could take because the business owes me $500. So now what I just did was I made $500 and I put it in my pocket and I'm not paying any taxes on it. Now that's only on a small scale. Sometimes those safes can be worth 50, 60,000. I had a client last year that bought a truck, and he bought it for personal use. And it was a big truck. And then he decided to start a moving business. And lo and behold, that big truck that he paid 60 grand for became like a $50,000 business write-off. Now that was huge. Okay, another creative way is to pay your kids, give your kids jobs instead of just giving them allowance. We don't even get a personal tax write-off anymore for our children. Okay, you might get a tax credit, a child tax credit, but my kids aren't, well, my kids are older anyway, but your kids aren't even worth the tax write-off anymore. Think about that. Well, they can be a tax write-off if you started paying them through the business. Now, you have to give them a legitimate job like cleaning your office, taking out the garbage, or maybe you even get them to fix your computer or do social media, stuff that we don't know how to do anyway. The kids know how to do this stuff better than us, so I don't care if they're 8 years old. My nephew was fixing computers when he was 8. I had no idea what he was doing. And if I would have followed my own advice, I would have paid him to fix my computers. But that's another story. But if you have a kid that can post things on social media for you or fix your computer, if you're putting money in his college fund, think about this. This was one of the strategies I came up with for a friend of mine that's rich. I told his accountant. I didn't tell him. I told his accountant because I said, you could take all the credit for this, but it's just understand it's my idea. If you're putting 50 grand a year away for college and or 20 or 10, all you got to do is hire your kid and you get the tax write-off. Yeah, you're going to have to pay the payroll taxes on. But if you're in a high tax bracket and you're paying, let's say, 15% in 15 to 18% in payroll taxes, and you're in a 40% bracket, think about it. And these are the kind of things that we need to do to get ahead of the game, because these are the kinds of things that all of these rich people are doing that you hear about to get away without paying taxes or paying lower taxes. Yeah, they could afford the expensive CPAs and tax attorneys. When you start making $1 million a year, you're going to hire somebody, hopefully, to arrange all this stuff. But when you're just going into business, you don't know this stuff. How could you? Because out of 25 million sole proprietors, most of you are probably doing your own stuff. So the last thing that I want to mention is the business use of the home. It's a no-brainer now, folks. We're all home, not even by choice anymore. Forget about the home-based business. Even regular jobs. or regular businesses where you had to go, you're not running from your business. You're probably running it from home. And now, as an S-corp, there's a really creative legal way to deduct your rent, your repairs, your utilities, everything that has to do with your home office without raising any red flags at the IRS. Now, to me, this is second nature. These strategies are really a no-brainer. And I encourage you, if you have questions about this, if you're not sure if this applies to you, book a free chat with me. Go to timewithjoe.com, and I'm now going to my fancy thing here, timewithjoe.com, and book a free chat with me. And a new announcement, I don't know if I mentioned this, but we have Bedrock University is accepting students. And all of these courses, all of the lessons are free. And I have, it's not just my courses. I don't even have any courses up there yet. But I have 8 world-class professors from Haley Gray and John Limbacher, Mike Wolf, Ricky Powell, Susie Pruden, are just a couple of them. And this lesson tonight and last night's lesson will all be up there available on Bedrock University. All you got to do is enroll, and if you want to be a professor, you can contact me and go to timewithjoe.com. I am looking for professors that want to get their name out there. We will be promoting Bedrock University heavily. So that's my story. I am sticking with it, and I am back. And I hope that you enjoyed tonight's broadcast. I hope that I gave you some value and gave you a reason to reach out to me and join Bedrock University. And that is my story. I'm still sticking with it. God bless you. Have a good night, and I will see you tomorrow. Thank you.